So Fiore Gold is a relatively new Nevada gold producer and developer. We've been producing gold in Nevada profitably for about 2 years now. And it's an interesting story. The history really is one of taking assets that were built by another company that went into bankruptcy as a result of awkward capital structure and some initial operating startups, and basically buying their assets at a very steep discount, turning them around, building them into cash flowing operations, and using that cash and putting it back into the business to grow. The mine that we operate, the Pan mine, was built by a company called Midway Gold in 2014. They spent $100 million US building the mine. They poured first gold in March 2015, and they filed for bankruptcy in May of 2015. So it was a fairly spectacular explosion, I guess you'd say. In 2016, those assets, the Pan mine and a couple of other assets that I'll talk about, went into the bankruptcy auction process, and we picked up that $100 million mine that had been built a year and a half before for $5 million. We proceeded to put it back into production, and you can see there the production has been ramping up. It's a relatively small mine. We produced 34,000 ounces in fiscal year 2018. We produced 41,000 ounces in fiscal year 2019. Our fiscal year is offset, so we are now in fiscal year 2020 as of October 1st. The big switch we've made at the Pan mine, other than some operational changes, is this year we've installed a crushing circuit. Previously it had been all what's called a run-of-mine operation. And the addition of that crushing circuit should increase recoveries, give us a bit more gold out of the same mining rate. And so we're roughly estimating somewhere between 45 and 50,000 ounces this year. We'll put out formal guidance in January once we've had a chance to have the crusher running for a few months. The cash flow from the Pan mine has been put back into our development project, the Gold Rock project, which is right next door. And our previous speakers had talked a lot about the permitting process in the US. We have a distinct advantage in that we are finished that permitting process. The mine is fully permitted at a federal level. That took 8 years, and the permits were granted in September of 2018. The previous owner, Midway Gold, had started that permitting process back in 2010, but they hadn't put out any economic studies on the mine at all. They permitted it entirely on internal economic studies. We will be putting out a preliminary economic assessment on that. It should be finished by Christmas, and we'll have the results out early in the new year. That's our growth path to get up over 100,000 ounces organically. And then, of course, we're looking at the potential for M&A to bring in other small single asset producers and continue to grow the company in that regard. Our assets are primarily in the western US. We have a couple of legacy exploration assets in Chile that we're currently not focused on and really looking for a home for. That's the Pan mine, our mine in Nevada. It's a fairly standard open pit heap leach mine. There's an aerial view of it. You can see it has two imaginatively named pits, the north pit in the north and the south pit in the south. We truck the ore to the leach pad, and we recover the gold by irrigating the leach pad and then pulling the gold out of solution in the ADR plant. A very simple operation, but one that's operated very, very well. As I said, cash flowing operation and a safe operation. This has been the safest mine in Nevada for the last 4 years running. We haven't had a single lost time injury in 4 years, and safety is always a leading indicator of operations. As we said, this is the mine that put Midway Gold into bankruptcy prior to us buying it. On top of some issues they had with their rather awkward capital structure, they had some technical issues. I won't go into this in detail. Feel free to stop by the booth and I can tell you about all the things we fixed. But suffice it to say, the mine is running well. You can see our production profile there. Quarter over quarter, we've been increasing gold production up into Q3 of 2019, averaging about 10,500 ounces per quarter. In Q4, as we were transitioning over to the crushing circuit, it took a little longer than we expected. We ran into a few more road bumps than we expected. We saw a little drop in gold production, and that should start to pick up again as the crusher is now fully in operation. All-in sustaining costs between $1,000 and $1,100 an ounce on a corporate level, and at a sort of typical 1.6 to 1 strip ratio, $1,300 gold, the mine generates somewhere between $3 and $4 million in operating cash flow a quarter, or about $2 to $3 million in free cash flow a quarter. And as I said, we've been reinvesting that cash back into our growth projects. The only thing really left to do at Pan is to continue to extend the mine life. The mine had a 4-year mine life when we bought it. It still has a 4-year mine life today after 2 years of mining. We've continued to add to the mine life. We've continued to grow the resources, and we're confident that we'll continue to add mine life going forward. We've just completed a drilling program at Pan, and we'll have a new life of mine update and a resource update and reserve update in the middle of next year. But our growth project is about 8 miles away. It's called the Gold Rock Project. It's the site of a former small open pit heap leach mine in the 1990s when gold was about $250 to $300 an ounce. And I'll just say that it made money at those gold prices. Gold Rock has about 400,000 ounces in all categories of resource. It has about a 60% higher grade than Pan. It's a very similar open pit heap leach mine. As you can see, it's very close to Pan. It's about 8 miles away. And the goal really is to operate these two mines as essentially a single complex. So Gold Rock, rather than being a fully new mine build, is something more of an expansion project to Pan. Again, zooming in on them, you can see the potential synergies between the two mines. We don't intend to build an entirely new mine at Pan. We'll have the open pits there, we'll have leach pads, we'll have carbon columns, but then we'll use a lot of the infrastructure that already exists at Pan. We'll use the ADR plant to recover the gold from the carbon. We'll pour gold doré there. We'll use the assay labs. We'll have the same management team, the same administrative team. You can see we'll be tying on to the access road and the power line that already exist at Pan. So we're pretty happy that both the capital costs and the operating costs are going to be considerably lower at Gold Rock than they would be if this were a new standalone mine. We'll have capital costs more nailed down in the PEA, coming out probably in early January. But we're estimating somewhere between $50 to $70 million US. And of course, the availability of project finance is a lot greater because we have a cash flowing existing operation right next door. We've been doing a lot of drilling at Gold Rock. We want to grow the resource there. The drilling's gone very successfully. It's a bit of a complicated map, but basically the drills, we did about 10,000 meters of drilling, RC drilling, and about 3,000 meters of diamond drilling. That will all feed into a resource update. That will be part of the PEA. We're aiming to get the resource up to about 500,000 ounces for this first stage PEA. We also think the area has a lot of exploration upside. In fact, Kinross, one of the larger mining companies in the US, owns about 6% of us. They put a strategic investment into us because they like the upside potential, the exploration potential at our Gold Rock project. I'll talk really quickly about one other project we have that we picked up from the Midway bankruptcy. It's in Washington State, near the Canadian border in the historic Republic Mining District. That's been a mining district for about 200 years. The last mines are actually just shutting down there. This has a historical resource from 2009 of about 1.74 million ounces at 1.89 grams. This was done at $750 gold. If you plug $1,250 gold into that model without changing any other parameters, you end up with about 2.2 million ounces. The biggest problem is that we need to unitize the ground with ground next door controlled by Hecla. Hecla has about a 1.5 to 2 million ounce resource that they're drilling off next door. We've talked about unitizing the two projects. It makes a lot of sense. They see it as a lot of sense, but Hecla's in a bit of financial difficulty at the moment and they're somewhat preoccupied. We will eventually make this deal because it makes sense, but in the meantime, this costs us $10,000 a year to hold, so there's no great rush. As I said, we have a couple of exploration projects that are interesting in Chile. We're really looking for a home for those. Chile isn't as much of a focus for us at the moment. Fairly simple capital structure. We have just under 100 million shares outstanding, about 20 million warrants that are well out of the money. We had at our last filing $9.7 million in cash, $22 million in working capital, and the market capitalization of the company is largely underpinned by the value of our Pan mine. There's really nothing built in there for the Gold Rock project, which is why we're so keen to get the economic study for that out early in the new year. On a valuation basis, we think we're relatively undervalued, but I'm a junior mining CEO and I have to say that. So I'll just wrap up. We've tried as a company to underpromise and overdeliver. We've done what we said we were going to do. We got the Pan mine up and running and generating cash flow to grow. We've extended the mine life. We got our Gold Rock project permitted. We've installed the crusher at Pan. We have no debt. We've done all of this out of cash flow. We haven't issued any equity. We haven't diluted our shareholders in 2.5 years. Coming forward, lots of interesting results coming out. Drilling results at Pan, drilling results at Gold Rock. Most importantly, the PEA at Gold Rock, and then new life of mine plan. And hopefully this year, we'll be able to get some traction on growth through M&A as well. And I'll leave it there. Thank you.